why does price move, because people that really move this market are not a retail trader like us. They are the big banks, the government, the companies, hedge funds, retail traders, people like us. We are just the retail traders. Me and you, we are just retail traders. You should know that the retail traders, they are, even if we deposit $1 million into the market, that is not gonna move the market. So people that always move the market are the big boys, the big banks, the Bank of America, the city banks, like the government, the companies, hedge funds. Those are the people that move the bank. So for you to know when the banks are stepping in, they step in at the supply zone. If they want to short the market, the bank are gonna step in at this point. So all you need to do is to wait after they drop the footprint. That's what we mean by supply. And you wait for a pullback to that supply zone, and you look for a sell signal. You are not gonna take the trade all because the trade just got back to your supply. No, you need to look for other confluence to combine. Don't worry, we're gonna talk about that as time goes on. So these are the big banks that move the market. Don't worry, I'm gonna explain everything on the real chart. I'm just doing a quick illustration on the please. Are you guys still following up so that I will know this video is gonna last just 50 minutes or 1 hour? So yep. So that's the people that move the market. So now I want to talk about broker. Currency premium, bid and spread. So under broker, under bid versus ask, spread and pays loss. Okay. I got that. Oh my god. W's. Let's go chat. Let's go chat. Let's go chat. Okay. So those are the people that move the market. You can just write that the big banks, the government. Like what when we are talking about the government, like Donald Trump can just come and just give a speech and the market will just go up and the market will just go down. All this thing that is going on now in Iran. So now we are just calling the forex market is it Trump era, because Trump is basically fucking things up. I think Trump has an insider, because after the peace talk with Iran, you see how the market rally. There was a lot of volume in the markets. We don't know because that was on Sunday. I think it was on Sunday or Saturday, but there was a lot of volume in the market. So what we want to talk about next is the broker. So where the broker comes in is the ask and the pay, because you cannot trade without having a broker. You cannot be a forex trader without having a broker. So what is a broker? Let me just bring it out here so that we can see. I'll just bring it out here. What is a broker? Please, can you guys see my screen very well? What is a broker? A broker is the company that connects you to the forex market. Without a broker, you cannot place a trade. So what I mean by a broker is when you're having a broker is just like intermediate people that are in between. They are the ones that connect you to the forex market. Without them, you cannot trade. You cannot place a trade. As a broker. So without them, you cannot place a trade. So if you are talking about pips, we have a pips. You have pip size, spread, and pips. So let's talk about the pips now. So this thing, you guys can go back and watch these videos. This is just for educational purpose. I'm not a financial advisor, and this video is for free. I'm not asking anyone to pay me. I'm just giving back the knowledge which I have learned for years. So you guys should see the hard work I'm trying to put in this. So what we mean by pips? Someone asked me how to set stop loss, how to know the pips, how to know the amount. If I have a $200 account, and if I want to risk $50 from that 200, how am I gonna do that? This particular topic is for you guys. If you are here on this live, you need to pay close attention, because I don't think I'm gonna repeat myself again after saying this. So a pip is a smallest standard movement in most currency pair. What it means by a pips is that a pips is the smallest standard movement. Like some people, they can say that the market has moved 1,000 pips. The market has moved 100 pips, 200 pips, 30 pips. So I'm just gonna write these pips down clearly here. Hello guys, I'm very sorry if I'm being novice, but I hope you guys are still following up. Let's go chat, let's go chat. Mm. So let me give you guys example on what I mean by pips. What I mean by the pips, and you guys still see my screen. This is on my screen, maybe one side. Let me shift this thing to this side. So this is the pips. If you want to talk about the pips, example 0.1 thousand is equal to, sorry guys, 1.1 thousand is like 1.101 lots is equals to 1 pips. So what it means is that if you are using one lot size on a particular market, each move is gonna give you $1. Each one pips is gonna give you $1. Each one pips is gonna give you $1. So if you are risking, if you are targeting like 100 pips, and each pips is giving you $1, you need to times $1 times 100 pips. So that's what we basically mean by pips. The pips help you calculate maybe your stop. Some people might be using like 30 pips stop loss, 50 pips stop loss, and they'll be targeting like 150 pips take profit, 200 pips take profit. But me, sometimes I use 30 pips depending on the market condition. But I always like to use a sniper entry. So that's what we mean by pips, and that's how to measure the pips. So please, you guys, we'll soon round up the class. I hope everybody has jotted down some things. If you have any question, please kindly ask. So let's proceed. I think, well, what the lot size. So now I want to talk about lot size. Okay. I want to talk about the lot size here. What up, chat? Anybody on? Let's go, let's go, let's go, let's go, let's go, guys. What are we gonna talk about this? What's the title of this? This guy should give me a few seconds. Mm-hmm. So now I want to talk about the lot size. What is a lot size? A lot size is the size of the trade. Type standard lot size. Standard lot size. We have the standard lot size. We have the mini lots. We have the micro lots, and we have the nano lots. So the standard lot size, I want to explain the standard lot size first. The standard lot size is equals to 100,000 units. The mini lot is equals to 10,000 units, while the micro lot is equals to 1,000 units. The nano lot is equals to 100 units offered by some brokers. Because it's not all brokers that usually offer the nano lots. But I think my broker they offer this because I always use like sometimes I can use like 0.001. Yeah, I think so. So that's basically for the lot size. So this is a lot size is the size of your trade. I'm gonna explain this again. So if you are using a standard lot size, in each move you make, you're gonna make 100,000 units. So if you are using a mini lot size, in each unit you're gonna make a 10,000. In each move you're gonna make 10,000 units. So, but for the beginner, I will prefer you guys should use the micro lots because for now micro lots you can use like the 0.01. It's still for the beginner. The lot size for the beginner probably profits. So if you know how to use the lot size, you will profit a lot. Because some people they don't really know how to use the lot size. They will just enter a trade and you don't know because if you don't have a lot size, you won't be able to set a stop loss or set your take profit. Even if you be able to set, but you won't know your targets, the amounts you are ready to lose, and the amounts you are ready to risk. That's where the lot size come in. You need to know the particular lot size you're gonna be using depending on your account size. So for beginners, we'll say you guys should stick on 0.01. And as a beginner, you don't need to look into gold. No, just focus on maybe Euro USD or GDP USD. Then maybe when you are well experienced with the Forex market, you can check out for gold. But for now, I don't advise any beginner to look into gold. I have been a victim of gold, so I don't say that gold is not good. Gold is really good. It's a type of currency pair that it's not even a currency pair. It's a type of commodity that moves. It's very volatile. It's just like a BTC. Just like BTC, very volatile, and you need to know how to trade gold before you even place a trade on your broker. Gold is so volatile. Why gold is so volatile is gold is like a safe haven asset. I don't know why if you guys really know what is safe haven asset. Safe haven asset simply means like when the US dollar is going down, or when the US dollar is dropping, and investors tend to move their money from the US dollar and invest in gold. That's why you see they buy gold with the US dollar. So currently now the US dollar is stable. I don't know if it's stable, but for now the gold is dropping because the US dollar is strong. So for now the investors tend to move their money from gold. That's why gold is going down and invest in the US dollar because the US dollar is doing well at this point. So we just have to proceed to leverage. I think that will be the last topic for today, leverage and margin. I just need to put the leverage on the screen. Please, this one, anybody that doesn't understand what I'm saying should ask a question. I want you to answer. So, what is leverage? Leverage let you control a large trade with a small amount of your own money. I'm gonna say that again. Oh, you guys should give me 1 second. Why my face now? Let's see what we got there. So let me give you guys an example of the leverage. So when we are talking about leverage, this is what we're trying to say. Why this thing no dey go one side? Show chart your shots. Show shots your shots. Oh, so let's talk about the example of leverage. If your broker offer 1.100 leverage, you can control a 10,000 position with about $100 of your own funds. Okay, that's really amazing. Don't worry, you guys are gonna understand this as time goes on. Anyone you don't understand, just keep watching this video all over and over again, and you're gonna understand some things. Leverage can increase profit but can also decrease the margin. So when we're talking about leverage, leverage can also increase profits. You know, leverage can increase profit, but it can also increase losses just as quick. Like leverage means say if you get like $100 account now, you open many position. If the market just move maybe to the direction that you want, you can make you can use that $100 to flip it to 1K immediately. But if that market goes against you at that point, you will lose that $100 immediately. So that's the real example of leverage. So if you are leveraging, know how to leverage. Don't just over leverage. So this one we're gonna talk about next is the margin. So what is margin? Margin is the amount of your own money set aside by the broker to keep a leverage trade open. Think of it as a security deposit, not a fee. Let me just write that down so that anybody that want to jot that, anybody that want to jot it down should simply do that. Yes, this margin. So I think I'm gonna cover up everything on this class. So tomorrow we're gonna talk about something else. So what is margin? What is margin? Are you guys still with me? What is margin? What the hell is margin? What is margin? Margin is the amount of your own money set aside by the broker to keep a leverage trade open. All the beginners, you guys won't really understand the meaning of this margin for now. Maybe with time, everything is gonna make sense. You don't need to force everything. You don't need to understand everything I'm saying right now. Just keep on learning, keep on coming up, learning. That's what's gonna make you the best. You know. And then Forex is not easy. Forex is a very difficult and easy profession. That's gonna give you financial freedom for life. You don't have to work for anyone. You don't have to call anyone boss. But before you get to understand the skills, bro, you need to put in more work. You need to be disciplined. You need to be consistent. So that's it for the margin. Think of it as a security deposit fee. So we're gonna talk about the last one, and then I think that should be it. Okay. So we're gonna talk about spread. Let me just put it on the screen so you guys can literally see what I'm doing. Let me still bring it down. This video has been so long than I thought. Yeah, let me just talk about this spread and we're done. What is spread? A spread is the difference between the buying price asked and the selling price bid. It's one where broker earns money. Smaller spread usually means lower trade costs. Okay. understand that. I only know that what is buy, what is sell, what is bearish. So that's it for today. Tomorrow we're gonna do something again tomorrow. That's it for today. Today was just mainly for theory, not practical. Maybe tomorrow I'm gonna dive into the main chart just to show you guys how the what the meaning of candlesticks and the meaning of buying and selling and how to. Tomorrow basically we're gonna talk about a lot of things tomorrow. We're gonna talk about. I'm just gonna give you. I'm not gonna give you guys a tip about what we're gonna talk about tomorrow. How to use the MetaTrader 5. Yeah, we're gonna talk about that tomorrow as well. And opening and closing of trade, how to open a trade and how to close a trade. That simply means how to get into a trade and how to exit the trade. And what we're gonna talk about again is market order versus pending order. Don't worry, you guys are going to understand all of that. Um, so the next thing we're gonna talk about tomorrow is the stop loss and the take profit. Yeah, that's what we're gonna talk about tomorrow. Then, and a candlestick. What is a candlestick? What does a candlestick does? What does it represent? We're gonna talk about that. So for now, I hope you guys have jotted down a few things on this class, and we might call it a day. Is it a day or a night, depending on where you're watching us from. So that should be the end of the live. See you guys tomorrow. Chat.